Hello and welcome to Your Business, Your Wealth. My name is Paul Adams, and that good-looking man just sipping that cup of coffee is president of Sound Financial Group. His name is Corey Shepard. So glad you guys could join us today, where we are going to look at the building of an ARK. Now, not Noah's ARK. We're going to be talking about a different ARK. That's Cathie Wood's ARK Investment ETF. And we're going to be a lot of learning in today's episode.
Say floating, but this one might be sinking a little bit.
It's certainly not resting on the top of Mount Ararat, I'll tell you that for sure.
No.
So, little Bible humor for those of you who enjoy it. So the things we're going to just kind of talk about a little bit, since ARK investments have been in the public eye. So we're going to do that a little bit. And then we're going to just kind of talk about what are the things that this ARK investment sort of story arc so far is illustrating to us, and what we can know about the media, what we can know about stock picking, and what we can know about an asset manager after they don't perform. How do they respond and react? So, Corey, anything else that you want to say as disclaimers for this episode? You started to say some initially. I want to, but as we are recording, let our audience hear your disclaimers to my orientation.
Well, I think that, America and American culture likes the celebrity, insert the blank, the one hero rising above and takes all the praise and then all the blame. And we're not attacking Cathie Wood as a person here. And what we really want to be looking at is this idea of that prophetic investment manager, the person who's going to outsmart everybody in the market. And because she's a part of a system where, she got raised up in that and probably got caught up in that herself. Like, it's very easy for a person to get caught up in the middle of that, just like any celebrity who becomes a celebrity for any reason can start to feel like they can't do wrong. Yes. And then some really bad movies get made after that.
Or really bad personal life decisions.
Or personal life decisions, yeah.
And the good news is, to Corey's point, we're not going to attack Cathie personally, mainly because I just don't know enough about her. I would be perfectly happy attacking her personally, but I don't know anything. She seems to be fairly nice. So not our goal to attack her, just to attack that a system exists that would lift her to the level of notoriety that she's at, given the results she's had.
So for maybe folks who aren't completely familiar with ARK or the curved path that they've traced.
Why don't you give them a little bit of background, and then we'll jump into the beginning of that journey.
Yeah, so it's a company that really, I think about 2 years ago, started to get some attention, or like a year and a half.
End of 2019 was when they really started getting a ton of media.
Right. And can we look at the line of their returns? Yeah. Should we just start with that to kind of trace that?
You're going to just give it all away at the beginning, but I suppose we can do it here.
Well, I think it's like some of those movies where you think you've given it all away at the beginning, and then there's so much more underneath the surface. But, I had several clients asking me questions about this fund. Just like over the last 4 or 5 months, it was like crypto lending and earning interest on your crypto and all these different funds. That no more conversations around that are happening right now.
Yeah. but like here in that last quarter of 19 was when we started hearing a ton about ARK investments and Cathie
20.
Wood.
Yeah, that's 20.
Oh, that's right. Yeah. So right here at the end of 2019 is when we started hearing a lot about it.
And it's kind of funny because there was a lot of conversation then, and then beginning of 2020, there was a big drop, like everything in the market dropped. But then, oh my gosh, for folks who aren't watching the video, you would not want to climb this mountain. Like, this is a bigger mountain than Mount Everest. Sherpas would run away from this mountain that we're seeing here, this climb.
Well, and to put it in perspective for everybody just listening, middle of 2019, the ARK investment ETF was trading at $41 a share. When it started getting a lot of activity and people talking about it was kind of that last quarter of 2019, and it had gone to 50. So that was a pretty good little run up. Then there was a slight rise in the first part of the year. Then COVID hit. They reached their low point of $37 in middle of 2020. I think that started to get them a lot of attention, which we're going to look at the kind of attention they got. A lot of attention because they didn't drop as much as people thought they would. And then they went over the remainder of 2020, which is when I think they jumped into most of the public eye. They went from 37 at the low point in March to 80 by year end. So a doubling of money since the depth of COVID.
Yeah. And their peak into 2021, about 300% over 18 months, about 3x in a year and a half. It's huge.
From 37 to 156, yeah.
Right. And this is like a lot of these themes. We saw a bunch of people asking about these funds and these asset classes. And really what this is it's similar to an S&P and a lot of these growth-oriented stocks, but even more focused, even fewer holdings, and really specifically around things like technology. Because Tesla, Coinbase are two of the biggest bets that she's made, I think.
Mm-hmm.
Yeah. So the question then is, well, what are we doing? Where is it now? And Paul, we can leave the folks who aren't on video in suspense if you want to talk about some other things before we talk about where we're at today.
Oh no, we gotta give away the end of that, but then we're gonna encapsulate the learning out of it, so we can go ahead and give away the end of the story at the start here. But it went from 150 at its peak near the beginning of 2021 to $30 today. So 150 down to 30. That is an 80% loss, if I did that right in my head. Like that is huge. And especially given that when you look at something like an ETF and you Google their past inflows, where did a ton of the inflows happen? After that bottom and through this rise is when they got most of the inflows. And now they're experiencing some of the biggest outflows of any ETF ever. Especially September of last year was really bad for them. So let's go back now and look at how they were viewed in the media. Now we can do that with a simple Google search where I'm encapsulating a period of time. And so our first is going to be 2019 through December 1, 2019. So this is kind of in that early bit of their run-up. Cathie Woods was speaking all kinds of places about disruptive investing. She made the assessment at one point back in 2019 that got her a lot of attention, where she said Tesla is going to $4,000 a share, which you were saying just the other day. Wow. They bought a ton more Tesla, right?
Yeah, they bought a ton more Tesla recently, and Tesla's gone down a lot recently too.
Yep.
And this is
Tesla's at 123 now.
Yeah.
And then when she said it was going to 4,000, just to give you an idea of how, I don't want to say,
dynamic the claim was. Let's just call it.
I didn't want to say delusional, so thank you. But more what these people are having to do is try to look so long into the future for what things will look like, et cetera. What everybody forgets about something like Tesla is Ford was not the first car maker. There were countless other car makers out there in the innovation of automobiles, and Ford rose up out of that and just happened to dominate. Now that's the one that everybody talks about. And now Tesla might be that, but that's the thing with any of these very innovative technologies, and people put truckloads of money into them. You don't know, that technology may be right, but you don't know if that company is going to be the one that produces it. So,
and the funny thing about Tesla is, and they could rise to the top again, but they're they made electric cars sexy, but there's not actually that much of a block to market entry for all of the other many times larger auto manufacturers around them. So like, right, if you're the first company in an industry that's really hard to get into, that could be a really good long-term advantage. But it seems like Tesla may have just created an industry and attracted their own competition into the, because I've seen ads all Christmas season for like the electric Cadillac. I mean, Rivian has a beautiful truck.
Yes, they do.
I've seen on the road. Like there's all of these different competitors, both new companies and old. But then they also have, like, Cathie could not have predicted Elon Musk and all of his other activities around Twitter. Like Tesla's stock price going down may have more to do with Twitter than Tesla. And you just can't.
You don't know.
No one can predict that kind of stuff.
And it's not that she's wrong in the prediction. She might be right. We don't know when she'll be right. But it's that kind of massive prognostication that we're investing in when we engage any active manager. Any active manager, we are in some way saying we think your prognostication is somewhat more effective than the billions and billions of people with limitless amounts of information compared to what one individual can process.
Right.
And they have set that price. And she says that price is wrong at 17. It should be 4,000. Okay, that's what...
Yeah.
I will say, and this is just going to be a slight taste of politics. Just slight, very slight.
Right.
But what's the difference between an active manager saying the free market is ineffective at setting this price, it should be this other price, and I'm going to wait till the free market figures out that I had the right price? That's what they're saying whenever they buy a stock for one price thinking it's going to go to a different price. So what's the difference between that and a Russian commissar from the USSR saying we and the government have all of the knowledge and this is what bread should cost, and this is how much wheat we need to gather, and this is the amount of, and what you inevitably do is you have any individual without using prices as an organizing rubric, you have no way to actually predict what something's price should be. You're doing whatever version of educated guessing. So they were talking about her.
There's something kind of fun about that. And maybe we'll just put a pin in this for a different conversation. The kind of investing she's doing is picking a company that they're going to sit back and watch go up. Now, private equity tends to do something different where they're going to put money into a company and then have a seat on the board, talk to, like, mentor the CEO.
Activist investor,
they're adding active, right? Well, they're adding value through some kind of human life value, some kind of change that they're making. Now, I'm not saying private equity is more or less risky, but you really have no control versus doing some other kinds of investing where you can actually say, hey, I can turn around this company by helping them run it better. It's a very different thing.
Yep. Very good. So here we have the 2019 stuff. She's just starting to get noticed, all of that. Nothing huge. But now watch how this narrative changes. Now, again, we're just looking at public narrative. What was out there at the time? What were people talking about? So now, let's see, which one is this? That's our March to December, our March 1 to December. Where is my December 1? There we go. December 1, 2019 through March 31st. Bloomberg, best investor you've never heard of. A close look at her ARK investment portfolio. In the know with Cathie Wood ARK Invest. Tesla going over 6,000 per share, according to.
Wait, 6,000? She upped it from 4 to 6 at some point?
She believes Tesla.
I think I missed that one.
Yeah, I did too, until we're just reading it now.
Yeah.
And so she's getting a ton of this attention. If you guys remember talking on the news at the time, and if you went through many of these clips, you're going to see a bunch of stuff that's like news interviewing her. your assets have grown so much in this return, and what are you doing? And the basic thought against ARK Investments is the idea of it would be innovative companies that are changing the world, and that's all they invest in, very narrow. And she got a lot of attention for it. But you can see the attention starts to shift just a little bit, because in 2020, now remember, for those of you, here's our 2020 returns. We started at 80 and ended 2020 with 142. Okay? So we started, now keeping in mind, 2020, oh, I'm sorry, I got that wrong. 2020 started at 50, ended at 142. Okay? So now we're looking.
It's so crazy to me that inflows line, the inflows graph down below, really almost perfectly mirrors the growth of the fund, meaning the majority of people with money in this fund got nowhere near the performance that it was logging.
That's
in fact,
right.
Way worse. And then we have
just for audience, I want to make sure
outflows.
they know what we're talking about. It's these red and green lines down here, inflows and outflows, or volume of trading, technically.
Volume of trading, and if it's green, it's net in. If it's red, it's net out.
I think.
Yeah.
So here we go. Now we have, so remember I said 2020 ended up being a great year, and we could see that at the beginning of 2020, she's just getting all kinds of good traffic. We can even go to the beginning of 2021. She disrupted investment management, another In the Know with Cathie Wood. More confidence in what they're going to do. Cathie Wood sees 20% returns after unbelievable 2020. Cathie Wood, the breakout star of ETFs. Cathie Wood, her confidence is growing in Tesla. All of these things. If you'd invested $10,000, these are always the great articles. Had you invest, which by the way, if financial journalists are writing articles saying, if you had just done this in the past, just stop reading. There is nothing you will take away but guilt, regret, upset, all that.
Great point.
Because
so good.
You didn't know that. Nobody knew. And nobody that invested at the end of 2020 after amazing returns knew they would get absolutely hollowed out afterward with this innovative ETF. Now, keeping in mind, here is the beginning of this year, this last year. So end of 2021 into 22. So again, how did we do? End of 2021, crushed it now. Remember, in 21, we got to a high of 156, and by the end of 21, we were down to 84. So it lost half from its peak.
Yeah.
So how did they view her? December 21, March. Her innovative stocks are drastically undervalued. Again, they should be worth more, I say, but all of these plebs who are paying whatever they're paying for these stocks, they don't know what they're talking about. We have strategy for investing in disruptive markets. Our companies are invested aggressively. She wants to rebuild trust. She's sticking with super growth stocks. ARK portfolio headed for a shipwreck. Give us 5 years. She defends her. So, which, by the way, all I'm pointing out is...
Even that headline right there, right, wants to rebuild trust. If that's what she's saying, that's the headline. It wasn't her quote, but it would be like, no, have the same trust as you've always had in what I'm doing. Like, there's a little sliver of the doubt in there. If there's something to rebuild, if it's not just, this is the plan all along.
And this is what I want to mention. Remember, this is the end of 21. It had just, beginning of 22, it had just lost 50% of its value. These are still fairly positive. Why? Like, there's there's some doubt. Could it be shipwrecked? But overwhelmingly, she's still getting a lot of media. How come? Well, if you're a financial writer that wrote about this person being a big disruptor and changing the world or whatever, and you might be a personal fan of hers for some other reason, and you wrote glowing articles through 2019, through 2020, you continued to write this stuff in 21. And then here's what that search looks like today. Here's the ETF. We're not searching by time. People are losing faith. She's doubling down on Tesla and Coinbase. This is like very recent, last 4 days. ARK Innovation, stock price, I guess that's Cathie Wood loses big money on every stock she owns. Cathie Wood's ARK snaps up more Tesla shares. How to invest like Cathie Wood, the motley fool. Shouldn't be that tough. That was mean. Sorry. But you get my point, is like, now it's starting to change. Now, remember, it's starting to change, but what are our results now? From a high of 156, we're now back down to 30.
Right.
That's that 80% loss. And this is why we talk about all the time two things. One, active managers cannot consistently or predictably outperform the market. They can't do it. ARK Investments couldn't do it. None of the history of all the asset managers whose data had been collected by people like the Chicago Booth School of Business in the, what do they call it, Center for Securities and Pricing Analysis, CRISP, those people can't out-predict the market. We probably can't. This is with all the research and everything they have going on behind it. Active managers can't do it. And the financial media does not care about your personal financial success. They're doing what they're doing. They're not against you. You're just not in their calculation. That when these financial writers, they're not evil.
There's nothing malicious happening.
No, just think about.
It's just not even in their head.
If you had a friend for a few years that you knew pretty well and was a pretty good friend, and then people started saying really bad things about them in the last 18 months, you'd probably be a bit of an apologist for them for a while. It's the same way with these active managers. That when you are a media darling, keep in mind the very people writing the articles are the ones that we have to count on to then call out poor performance when it happens. And if we got into this fund because of the media, and according to the amount of people that invested in them, probably the media had a lot to do with their total inflows, then we can't count on them to tell us when that asset manager is no good anymore. Now let's just take that out a little bit further. When they say this stock is a really good stock. Now, I don't mean just financial journalists. Could be somebody like Jim Cramer, who we've talked about in the past. How do you go down the path of like, well, you guys saw it live if you pay attention, Jim Cramer during the 2008 fall apart. Keep your money in Bear Stearns. Bear Stearns is fine. Nothing's ever going to go wrong with Bear Stearns. That wasn't based upon him doing all the math. That's him knowing and talking about this company for many, many years. And it's very difficult to suddenly do something that's not consistent with that. And again, that's not bad on their part. It's just bad if we think they're watching for our interests and we act with our money like they're watching for our interest. And then what we get instead is a plot line that looks like this. Where if our money had been invested in 2018, when it started to get its run up, our money would have been invested in ARK since middle of 17. I'm going to go up so we can match it. There you go. So about middle of 2017, and your money would be right back to where it started, producing effectively zero return over this period of time, and nearly any other investment you could have been in would have produced return for you. Now with that, Corey, you had found an article that interviewed her a little bit, and could you just share a little bit about what she said, for lack of a better way of saying it, in defending their performance based upon what people should be doing with their investments?
I think so. I don't still have that article open because I sent it over to you. I thought you were going to share. Let me go.
I just didn't know where it was.
Oh yeah. But I got it now. Yeah, I got it now.
Okay.
Here's the couple of quotes I think are really important. Talking about the market environment, and this was posted 4 days ago, so in the last week, I'm guessing but she said, a lot of deflationary signals, but the Fed isn't buying yet. The bond market will start to convince the Fed, and then the Fed is where. So basically, it's not like when things are going well, it's all me. When things are going bad, here's the outside reasons why things are going bad and where it'll come, is how it feels to me as I'm reading between the lines. The other piece that's really telling is she says why they're not, diversifying as much. She says, we are not asset allocators, and people aren't buying us just in a vacuum, based on paraphrasing. But she's saying, like, we're just a small part of someone's portfolio. Now, that's nothing of what I heard from people interested in investing in her when things were going well.
Yes. Every single person is like, should we?
Everything in our,
yes.
Just punt, right.
Yeah, there's like, and I think the thing, while people wouldn't do that with a Bitcoin, right? They wouldn't say, I'm just going to take everything and put it in Bitcoin. There was a time people were saying that, but I'm saying for the most part, you didn't hear that. But it's because it's an ETF with a celebrity asset manager, it feels like maybe you're better allocated when you put it in. But as evidenced by the actual results, no. And when we look over and over again at an asset manager's, we've talked about on the show, an asset manager's ability to outperform the market, it again and again demonstrates they can't do it consistently or predictably. So what are our lessons from here today? One, be very cautious of the celebrity financial guru unless they have a beard with just beautiful thickness. Then that particular, but even that, you guys should not take something we say on the show and implement it if we're not coaching you. And like, take an idea from us and go present it to your advisor and wrestle through that to get that great. But to just take one thing we throw out and say, oh, that'll just do that, that would be as silly as buying ARK. So financial prognosticators saying that you can outperform the market eventually prove that they're wrong. And that's not a problem in the marketplace that they prove they're wrong. The problem is if your money's in it when they prove that they're wrong. And second thing we want you to take away from today is that we cannot trust the financial media to call out their previous darlings. I should say we can't count on them to call out their previous darlings in an amount of time that would be relevant to us. Because I bet you if these results kind of stick like they're sticking for ARK, 6 months from now we could do another update to this and we probably have just people being totally shredded at ARK by the media. Or
maybe just no articles about it. Like if it just stays zero, maybe we'll hear something. But if it just kind of stays non-remarkable from here on out, it just isn't a story anymore,
Yep, well said. And so that's what we want you guys to be able to take away. You can't trust any of the darlings because the darlings, the academic evidence shows over and over again that the previous darlings, just like anybody gambling, you can have a winning streak. But then eventually it always levels out to the average. And it's the same thing with these investors. Because keep in mind, on every single stock trade that they're doing, there's somebody on the other side who's also very smart, who's saying, I think Tesla is not going to go up. That's why I'm selling it to you.
Right.
So it's not an easy game. We can't trust the prognosticators, can't trust the media to call them out. We can't trust them to call them out in a reasonable fashion of time. And that's why it makes sense to always have your team to make assessments, read the articles, get the ideas, write those things down, bring them to your team and have those conversations. Because if you do, like if you're watching right now and you just go out and do your best to just go, oh, would that work? What would my long-term work? Because, by the way, the second you project out even 10 years, even if you wanted to say like ARK has really great investment results, you go, but 20% every year? Like that starts to get ridiculous. Just simple modeling would show you how ridiculous some of the assumptions get. And you can escape that literally this huge machine called the financial media machine put this investment in front of you with like lights and neon and a blinking arrow to put your money in. And when it turns out not to work, they don't do anything similar to caution you. Because if we went to any of these publications, the same day that they will have a negative article on ARK, they will be manufacturing a new prognosticator, a new prophet that you can follow. Because they need to. Because again, they're not concerned with your financial aims, they're concerned with views, clicks, etc. And so we hope you guys take that away, that it always comes down to you being your fiduciary, always comes down to you making good assessments, you having a good team you can review this stuff with, so that you can sort some of the fact from the opinion and a little bit of the hype from the real hypothetical outcomes you might have in the future from that investment. So, I know, I'm working on rhyming more often, Corey. So with that, well, it's the beginning of 2023. We're so glad you guys are with us. We're glad you've been with us since middle of 2016 when we launched this podcast. We got many more pieces of great content coming up. But the thing to take away from today that's going to help you design and build a good life is this year, there's going to be many more prognosticators minted by the media and many more people saying this investment is the thing in 2023 that's going to matter. Stick with principles, stick with discipline, stick with philosophy, and stick with us every single week. And we will endeavor to help you design and build a good life.